Hi, this is Elliot Eisenberg of Grafton Labs here to catch you up to date on the latest residential sales data for the month of June. In Hillsborough County, single-family home prices increased 1.1%. That doesn't seem like a lot, but it was the best performance across all three counties and both types of properties. Multifamily prices slipped 8.3%. That was, well, not great, the best performance across multifamily across all three counties. Sales activity pleasantly rose 6.1%. It was year over year. It was positive across all three counties for single family. By contrast, for multifamily, it slid 16.2%. Sales price as a percentage of list price continued to decline on a year over year basis. It's now 97.2% on the single fam side and a weaker 95% on the multifam side. Pending sales activity slid for both types of properties. Down 5.6 for single family and more, 10% for multi, but that was the best multifam performance or the smallest decline across all three counties for multifamily. And inventory, as we know, continues to steadily rise. It's now 4.2 months on the single fam side and a larger 6 months on the multifam side. In Pasco County, single-fam home prices slid 4.9%. On the multifam side, they slid almost 3 times as much, 14.3%. Sales activity on the single-family side was up 8% year over year. That was the best performance across all three counties and both types of properties. By contrast, on the multifamily side, because the multifamily side is substantially weaker than the single-fam side, sales activity slid 13.1%. Sales price as a percentage of list price continues to decline year over year. It's now 96.1 on the single family side and a weaker 95.1 on the multifamily side. Pending sales activity increased 1.8% on the single fam side, but slid 16.1 on the multifamily side. Another indication that the multifam side is weaker. Lastly, inventory continues to rise. It rose from 3.2 months a year ago to now 4 on the single family side. And on the multifamily side, it's now 4.7, up from 3.7 a year ago. The value and the deals are certainly to be had on the multifamily side. In Pinellas County, single-fam home prices declined 6.9%. Multifamily home prices year over year declined a little more, 9.4%. Sales activity here in Pinellas increased year over year like it did in the other three counties on the single-family side. Here it rose 7.3%. On the multifam, sales activity declined 6.2%. That was, however, the best performance for multifamily across all three counties. Sales price as a percentage of list price continues to decline year over year. Here it's 94.2 on the single fam side, which is weak, and it's an even weaker 91.6 on the multifamily side. Pending sales increased a strong 10.2%. That was the best performance across all three counties and both types of properties. On the multifamily side, pending sales slipped almost 20% year over year. Inventory here, like everywhere else, is growing. It's now 4.9 months on the single fam side, up from 3.8 months year over year. And on the multifamily side, it's now 8.6 months, up from 6.2 a year ago. While both single family and multifamily are weakening, multifamily is clearly weakening more. Turning our attention to the national market, while the labor market continues its slow, steady weakening, what we're now also starting to see is consumer sales activity stumbling a little bit. I'm not yet nervous, but I'm paying attention to the decline. And we're also seeing inflation maybe no longer decline. The latest inflation data on goods showed goods prices increasing, and that's probably because of the impact of tariffs. Q1 had mildly negative growth, performed very poorly at about negative 0.5% because of front running of tariffs and massive imports. The second quarter is going to be much better because there'll be relatively no imports because of no front running of tariffs. The key question is what happens in the second half of the year. And I suspect GDP is pretty anemic at about 1%. Last year, it was about 2.5 in the second half of the year. And this is because rates are too high and tariffs are going to have an impact. And there's also uncertainty surrounding the tariffs. Because of this uncertainty about tariffs and how much the slowing of the economy will take place, the Fed remains uncomfortably in wait and see mode. It expects inflation to go up. It also expects unemployment to rise. And the question is, which one of these is more important at the end of the day? And I firmly suspect that it's unemployment that's going to drive the Fed. Yes, there'll be a bit of inflation and then it will go away 8-9 months from now, a year from now. But the unemployment rate may be more persistent. And that's why I expect the Fed to cut rates. The question is how fast and when. I still expect 2 cuts this year. The Fed meets every 6 weeks. They have 4 more meetings this year. That said, we're beginning to run out a year. So maybe we get 1 cut, but I still suspect we get 2 because the economy will weaken because, again, of tariffs and uncertainty and inflation rising and so on. If we look at the national housing economy, it's very weak. We know sales activity is right about 4 million, which is the weakest. It's been at that level for years, but that's the weakest it's been in a very long time. And the first time we had that level was back almost 30 years ago. So the housing market remains weak. And why is it? It's weak because interest rates are high. It's weak because prices are high. And now what we're beginning to see is rising meaningful increases in inventory. Inventory is now 4.7 months nationally. Last month it was 4.6. The month before that it was a little bit less, but it's steadily continuing to rise. And as a result of that, there'll be downward pressure on prices, and that should increase affordability. If we turn our attention to the Florida economy, GDP for the state of Florida has done quite nicely. It continues to grow and break records quarter after quarter. And while unemployment is rising in Florida, it's still well below the national level, and the national level is also increasing. As for the Florida housing market, maybe the less said, the better, but it's clearly weakening. And what's going on is we're experiencing reverse COVID. That's really what it is. You know, in 20 and 21 and 22 and 23, the strongest markets were Florida, the South, Texas, Arizona, and so on. And now those are the markets that are performing most weakly. By contrast, markets outside those areas, New England, the Northeast, the upper Midwest, parts of the West Coast, they're doing much better. One of the key parts of the Florida market is the condo market. And while the housing market in general is weakening, the multifamily market is weakening meaningfully more than the single family market is. And these declines have a hidden benefit. There's no doubt. They increase affordability, and that's a good thing for buyers. And for sellers, the key thing is to price your house appropriately from the get-go, get it staged, and understand that this market is no longer the market it was just a year or 2 ago.